I think China is going to seek vengeance by pretty much wrecking the COMEX.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And a quick note before we get started, because for all of you silver fans, if you've been wondering what's really been going on in the silver market, why the price has gotten so thoroughly pummeled since 2011, whether there is a big short position, what the banks and JP Morgan are up to, well, you're in luck because I have a book coming out called The Big Silver Short, which digs into all of those. You can find out more information by clicking in that link that just appeared to your upper right. Think you'll enjoy it. And with that said, now here's Jim Willie talking about gold and silver.
Where do you want to go next? This is your show. I'm all over the place, Chris, and not apologizing, but we're just two guys talking.
You're perfect just as you are, Jim. Although I would love to hear what you think is going on with palladium and rhodium. I think rhodium was above 12,500 an ounce today. Palladium had settled down for a while, then jumped about $300 last couple of days. And as I understand it, palladium in particular, the metal's just not there. Where we've reached that point, you can hammer your paper contracts all you want. Certainly what I think a lot of folks, myself included, have expected will one day happen in gold and silver. So is this perhaps the first metal that goes, oh, and I have a new phrase for you I think you'll like. Instead of going vertical, I say goes Tesla. So
It goes Tesla.
Is palladium going Tesla, and soon gold and silver will follow? What are you seeing there?
Well, let me make some general comments. First of all, please help me. I know that the platinum group is extensive. The platinum metal group, PMG. I know they're extensive. Is rhodium in that group?
I believe so.
I think it is.
We'll take a look here.
Well, here's my point. I got to admit, you know, one of the nicest compliments I've gotten over many, many years in my work history is that I don't lie. I don't fake it. And if I'm deficient in something, I don't pretend. And what that means is people don't act on my bullshit if I produce bullshit so that it has to be cleaned up later. I say, don't rely on me on anything here. Let me investigate if you want, but maybe look to Joe or to Catherine, who might be better sources.
Well, we have Google saying
there you go.
Ruthenium, rhodium, palladium, osmium, iridium, and platinum.
Wow, that's a nice quick answer. All right, here's my admission is that I don't know much about the platinum group, except that I believe palladium is in catalytic converters. Yep. And now we have a new, I remember this was about 8 years ago, 10 years ago. It's amazing. This April will be 16 years at this newsletter. There were a lot of thefts of cable wire for its copper. And Henderson, Nevada was a big victim. Because they were building out the city and, you know, extending into the community. And at night, bandits were stealing large spools of copper cable. You know, stripping off the insulation and just selling it as raw copper. Now what you're seeing is cars overnight are getting their catalytic converters stolen. This is, to me, it's a confirmation of value. Of course, it's insidious, but it's a confirmation of value if you stand aside and look objectively at what's going on. There should be an armed guard next to your catalytic converter.
Yep.
If it's an older car, then the converter was probably purchased at a very cheap price. So now it's risen in value, and under the hood is not a good bank safety box. So we need to lock our hoods. Okay, it gets strange. Okay, here's my overall point. given my foundation of semi-ignorance in this platinum group. This is what happens to gold and silver when you get COMEX out of the way.
Yep.
And let me put on the table something else. China has already vowed vengeance. They said, if we prove that certain groups were involved in planting this virus that kills a lot of people in our country, we will hunt them down and make sure that not a single hair on their head will continue to be above this ground on the earth. In other words, they're going to bury them. They're, just kill them, bury them, burn them, whatever. I think China is going to seek vengeance by pretty much wrecking the COMEX. I think they're going to bide their time. There's a phrase saying, well, Chinese time is like 10 times, 20 times longer than New York time. It's faster than New York minute. Okay, that means like 2 seconds. A New York minute, that's 2 seconds.
Yep.
A Chinese year is like a decade. So in the next couple of years, or 6 or 10 months, I'm thinking they might wreck COMEX. And they might put a gun to JP Morgan's head to help them. It's going to get very complicated. China is going to do their homework. I don't think it's going to take them long to find the roots of this in a US laboratory and a British laboratory. I have a lot more to say about this in the February newsletter, where only about 20% or 10% is going to be about the virus and economic effects and some of the medical health implications and factoids. But what I've done is I've done 80%, 85% of the report up to now, and it's going to be, I think, posted over the weekend by my European web manager. I've left the virus chapter for last because it's a fluid concept. It's a fluid story. By that I mean, tomorrow we can get some really shocking information that might dismiss a third of what I already thought I knew. I don't know. I do that with the report. I do the constant fix things like, Belt and Road projects and Pakistani port facilities and, Saudi oil developments and Aramco. But then I leave for last the fluid things like bond market. We can talk a little bit about the bond market when I'm done with this. But I think China is going to seek their revenge with the dollar and the U.S. big banks, not so much the economy. They don't have any grudge against, say, the farm sector. I mean, they buy their soybeans. They don't have any grudge against Silicon Valley. Well, they compete, but they also cooperate. They're going to go after, I think, the banks and the gold merchants. I don't mean like Manhattan gold vendors of APMEX and no. I'm talking about the gold market masters. I think they're going to target our gold market. That's what I think. The dollar, and they're going to just like a cat plays with a mouse. I don't know if you've ever seen a cat capture a mouse. I have a few times. I had a lovely long-haired black cat named Tiffany when I lived in the same little town as Doug Flutie, West Natick, Massachusetts. I met Doug Flutie once. I walked away with 2 impressions. Golly, I'm 4 inches taller than that guy, and he's a superstar in football. And the other impression was, damn, is he handsome. I don't mean a little. I mean, damn, is he handsome. Anyway, little Tiffany, about once a month, would bring in a mouse. And many times I shoot it. I said, I threw it by the tail. I threw the mouse out in the patio and said, go get it, not in here. But a couple times in the wintertime, we were bored. My buddy Calvin and I, we were living together, but we each chasing girls. He had more luck than I did. what I'm trying to say is we weren't gay friends. He was occupying. You got to be careful these days. Calvin and I were living together. Yeah, we weren't sleeping together. Anyway, Calvin's still my buddy. I helped him out a while ago. He was out of work. I don't think I'll ever get that loan back again. Calvin and I were watching Tiffany kill the mouse. It wasn't quick. And that's what the Chinese are going to do. Tiffany patted him, get him to move so he could chase him. And he went behind the couch, and Tiffany went and got him out and rooted him out. And he crossed the other way into the other room. That's what China's going to do with our gold merchants. They're going to play with them. They're going to continue to get the cheap gold. They're going to let them suffer some heart attacks. They're going to enjoy it over wine and whiskey back in China, watching them struggle, watching them have heart attacks, watching them have seizures. It's not very well known, Chris, but let me go back in history to 2005, 6, and 7. A lot of people are calling this the everything bond bubble. I call it the systemic layman event coming. But in 05, 6, and 7, China sold all their Fannie Mae bonds. Now, please remind me, was it mortgage bonds that caused the problem with Lehman? Okay, you think selling maybe $100 billion worth of Fannie Mae bonds by China could have set the stage for the subprime bond collapse? You betcha. Okay, and then they sold all their long-term bonds, and you think that might have provoked QE? So China is behind a lot of our financial crises. I think China is going to do something, and I think they've got a plan. The Voice was involved. He doesn't mind me saying this because I kind of blew it 2 years ago. The Voice was involved in a stress test for the Petro Yuan contract after he helped to do some design work for their oil and gold contracts in Shanghai. And now all three are working together. It's oil, gold, and RMB. In other words, Russia can sell a bunch of oil and either take RMB or gold, or Russia could sell China oil and pick up RMB and later convert to gold, or go the other direction. Okay, that's what the Voice was involved with. And he had a lot of stories. And I think one of the stories that stuck in my mind is that he said, the Chinese make plans. They deal with their 5 and 10 year plans. The United States deals with their 1 quarter plan. And we don't mind wrecking 3 quarters down the road as long as we get good executive compensation and stock options for next quarter. Yep. Doesn't matter that Boeing is wrecked. Here's a little known fact. I know we're wandering. I don't care. I've come to learn that Boeing, they didn't just make a colossal error by using software for their upgrade. They put on a bigger engine, didn't change the rest of the plane, and thought they could fix it all with software adjustments, at real time. Yeah, right. And they outsourced it all to India. Oh, what could go wrong there? How about everything? Okay, I'm hearing now they're gonna split it into a military subsidiary and or component business segment and a civilian business segment, and have bankruptcy declared for the civilian segment, and have the military take over the military segment, but throw all the debt into the civilian segment. Oh boy. I think China is going to play around and execute on their plan that they've had on their shelf for the last 2 years. Ever since the 2016 oil, gold, Shanghai contracts, and ever since the 2018 Petro Yuan contract, they've been devising a plan. They've been using Australia and Hong Kong to acquire a lot of gold, and the data is impossible to keep straight because the Chinese have managed to keep us very confused. When it comes to Hong Kong, is it Hong Kong through Dubai? Is it Hong Kong through some Soviet republic, or is it Hong Kong through Indonesia, or is it Hong Kong through Australia? We don't have a clue. And it's very messy. So I'm very encouraged that we're likely to see some kind of a breakdown in the gold market, because the only way we're going to get gold released and moving like palladium should be trading, like only way we're going to get gold, how you say it?
Gold trading.
Gold should be trading like palladium. The only way we're going to get that is if the COMEX gets wrecked. And just a little background, a year and a half ago, the London Bullion Market Association, LBMA, the London Gold Market, started doing something to complete their fraud. They've had a lot of different phony short contracts, but now they had phony delivery on the long contracts. And what they've essentially done is they've falsified both the long and the short side. And they've completed the loop to the point where they've raised now suspicions that the phony delivery in London is like an order of magnitude bigger than the global gold output. So how did that happen, London? And they have to say, well, you know, it's complex. Yeah, so's your fraud. And that's what they've done. What they've done is they've painted themselves into a corner of perception. It's been known for a long time that their sell side has been corrupt with futures contract. But now, I don't want to say their long side is corrupt. I want to say their delivery system is corrupt. Whatever could not be rolled over into cash contracts now has a phony delivery. So they've pretty much eliminated. This is something Volcker did, by the way. Volcker, I had some respect for Volcker. I thought he was a good guy, and when I made a couple comments, I got 3 or 4 people saying all the same thing with details in my Contact Us. My Contact Us sometimes is a teaching tool for me. They said Volcker allowed interest rates to be high, but he looked the other way when they did the gold carry trade with 0% leasing, and he eliminated the buy contracts from the COMEX. So it was a sell-only gold market. He made it very, very difficult, if not illegal, or you'll be disinvited in the future from the COMEX if you try to buy gold in our market. So if you want to buy gold, you got to go to Dubai, or you got to go to Shanghai. You got to go somewhere else. Get out of New York. Get out of London. You're not welcome here if you want to buy gold. That was Volcker's contribution. In addition to the good things he did with the higher interest rates, the United States right now deserves more than the 10% that Greece had at its worst moment. We deserve 15 to 25% right now,
And Jim,
based on our fundamentals.
Can I mention one comment on Volcker? Because I actually have his Keeping at It autobiography. This one pops up from time to time. But on page 61, he's talking about the collapse of the London gold pool, mentions strong public market demand for gold had required intervention by major central banks, which sold gold from the reserves to prevent the price from rising above the long established levels. So, I mean, the guy flat out admitted it in his own book, which...
But he also said something publicly else. He said, the only mistake I think I really made was not suppressing the gold market sooner.
Well.
Okay, that's an admission that he did later, but he felt bad he didn't do it earlier. And why did he do that? Because the dollar was at risk. Okay, if you have very high interest rates, that's the other half of the story where you've got a threatened currency. Okay, the high interest rates helped save the dollar, but he wanted to remove the thermometer, not the barometer, the thermometer. And the thermometer was the gold price. He wanted to bring that under control while they brought the interest rate down so that they would not have a lower interest rate showing calmer currency market with a contradiction of a rising gold price. That's a subtle point. I think it makes a lot of sense. And that's what I've learned. And a 3 months ago, I had a nice little semi-eulogy for Volcker. He fulfilled a role. Some of it was good, and some of it was not good. And I had to come to learn what the not good part was. But okay, how do you want to finish this? I think you got one topic left. Oh, the bond market. The bond market. The
Well,
repo.
actually, one last quick question about gold and silver. This is showing the blue line here is showing the amount of ounces that are in the silver ETFs, which we can see right around the time of the rally, about 1020, so about 1 billion ounces, jumped about 120 million ounces, which is double what went in back in 2010, 2011. Who do you think, was that China? I mean, I've always thought, gee, if I were China and I'm sitting there and tired of being labeled a currency manipulator and everything else, that really silver would be the Achilles heel of this banking system, of the gold and silver COMEX market. Any thoughts on whether that was China or who did that and why they may have, it looks like they at least slowed down, if not stopped since then?
Okay, I've got some snap reactions. When I heard about the coronavirus, my snap reaction was Langley and MI6 did it. Prove me wrong. That's going to be my construct opinion. Prove me wrong. Whenever I see extraordinary events in the gold and silver market, I say China did it. China's behind it, or China's responsible, or China is a major factor in the event. Prove me wrong. So I don't say this is what I think and I'm sticking with it. I say this is my opinion preliminarily. Let's see how it holds up.
Yeah.
With the flow of evidence. That's what a critical thinker does. And I try to do that pretty well, I think. Anyway, notice the time frame in that coincides very closely, not exactly, with the rise of the repo volume.
Yep.
Okay, repo volume started in September. Okay, so what you've got there is June through September. And it's not rising in October. I don't think it's rising in October. The big rise is in August and September.
Yep.
Now, here's what I think was going on with that. And if you could pass me that chart with an email, I'd be grateful, because I'd like to include that in my report. That's a nice, interesting chart. And here's my justification. Without a lot of research, except for the general research that I always do. I think China saw that the repo market was in trouble, and therefore the treasury bonds were in trouble. So whatever China had with treasury bonds that were not hedged, in other words, whatever treasury bonds where they still did not have, where they were still risky in their holdings. Okay, when you hedge, what you're doing is you're saying, well, I'm going to put a futures contract on a proportion of that with leverage, and if it goes to shit, I won't be so badly hurt because my insurance policy will cover about 80% of that. Okay, that's a hedge. It's a funny word because think of the hedges on your property, a big hedgerow of this wide, and I used to cut the hedges for my mother because I thought, yeah, this would be fun, and I don't want to see her sweating her face off out there. She'll always appreciate it, and have some cookies ready for me when I'm done, or iced tea. I think the Chinese saw the repo market was in trouble and therefore loaded up on silver. But there's another story going on that has been going on for at least 2 or 3 years. And I believe it began when the Chinese took over the JP Morgan headquarters for a song. Something like 20 to 30% of its value. And a couple of people have corrected me and said, Jim, it's not that it got a huge discount. They were able to buy it for the defaulted amount on the loan, because the backing and collateral on the loan of, let's just make it up, $400 million. The backing was the whole building. So they took the building worth 3 times that and made out like bandits because the loan was worth 400. So that's what they converted, their loan. They didn't invest anything more, and now they're sitting on it. But what they got was a new J.P. Morgan coolie, a servant, a slave, a banking house slave. And J.P. Morgan, I am told, is confirmed in numerous different places. J.P. Morgan has been acting as the agent for China to replenish their fast depleting silver stockpile that they accumulated 20 years ago and have been using during their industrial output era that has lasted over 15 years. So they want to replace and replenish their silver. So I think, okay, you're talking about 120 million ounces. That's a lot. But I think they got a lot more than that. I think whatever they produce, they don't export. That's true of their gold. And if you think they're not getting any from Mongolia or Kazakhstan or Uzbekistan or Kyrgyzstan, you're nuts. They're getting a lot. They probably also get a good deal from Russia. Russia's a major producer. Here's a little factoid. All the major silver producers are seeing a big decline. It's Mexico, it's Chile, what's the other one down there? Ecuador. And Russia announced that they're seeing equal declines from their major mines. So you've mentioned, Chris, that the weak link in precious metals is silver. I agree completely. If China wants to wreck the gold and silver market, they can start with silver, and they're welcome to do so. I'd love to see them break COMEX, because if they break silver, it won't be long until they break gold. Because when you break silver, a lot of other investors, it's kind of like blood in the water. One shark arrives and whoops, now you got 10. This is what's going to happen with gold and silver. So I've been studying the weak links for quite a while. I've got one particular friend. He's in my jackass crew. He's not a big contributor, but he's a smart guy. And he calls me up every 2 or 3 weeks and said, Jim, WTF is going on? I said, you mean the gold price? I said, well, let me explain the factors. Here's what's going on. And we're getting close to an event. I kept saying that for a year ago, for 9 months ago, for 6 months ago. And then finally something happened last August and September, July, that time frame, to push gold up and knock out that 1350 resistance. And now we're in a new range. So here's my little gold forecast that will come to the fore in my gold, in my hat-trick letter report that's coming out this weekend for February. Not only will China look to wreck COMEX and the London gold market, but they're going to devalue their currency and engineer a nice, powerful gold rally in Chinese currency. And by the way, not too much attention is given to Japan, but is that a white man race? I don't think so. They're vulnerable in Japan, and they apparently were a staging ground for planting the Wuhan virus. Now they're seeing some infections. They're probably going to see some deaths because they are of the yellow race. But Japan just had an event happen in the financial markets. A 20-year trend was broken, an uptrend. A 20-year trend was broken, and now we have a breakout of the gold price in the yen. Here's the vengeance. China is going to arrange for all the Asian nations to have a rally in gold. And it'll start a gold fever. And what would that affect? The gold supply. Yep. And that could be how they wreck the COMEX. They're going to say, come one, come all to Shanghai and buy some gold, whether it's a futures contract or it's a buttload of coins. They've got a world-leading type of gold coin. I've seen one. It's beautiful. And I've got some friends who got a bunch of them. I've got a couple friends who like to have, you know, the Dubai coin and the China Panda, and they like the Krugerrand, and they like the Canadian Maple, and they like the silver eagle, the gold eagle. They like to have a bunch of them. What do you call it? Not Philadelphia, the Vienna Philharmonic. That's a beauty. So that's going to be the vengeance of China. And, I hope to learn more about this silver big jump. That's ETF volume, right?
Yeah, that's into the like SLV and the other. Amazingly, Deutsche Bank has a silver ETF, which I don't know which is more ridiculous, that Deutsche Bank, who already admitted to manipulating gold and silver, has an ETF, or that JP Morgan, who's being charged with the RICO Act, is the custodian of SLV. But I mean, it's amazing. And actually, I'm curious, did you hear there's a report going around that the seals on the vaults of Fort Knox have been broken?
No, I don't know.
They have seals on the doors to basically
what doors?
verify that
the vault doors or the front door? No, what doors?
The vault door at Fort Knox. Basically, with the point being, if the seal's in place, we know no one's been in there. And Jan Nieuwenhuis, I believe you pronounce his last name, out of the Netherlands, who writes for Voima Gold, has mentioned that the seals have been broken. He also mentioned there have been 12 partial audits of Fort Knox in the last, let's say, 40 or 50 years.
Why are they partial? How do they get interrupted, or why?
Well, calling it an audit even would be generous, because there was no mention of who did the assays, and it would only be like one or two.
Okay, let me reframe your story. They took 10% of the legitimate side of their vault, put it over in the corner, and said, do an audit of that.
Well, it actually gets even better, because of these 12 audits, 7 have been lost by the Treasury.
Those are the unfavorable ones. Yeah. Their crime scene is getting laughable. We're laughing, but their crime scene is getting laughable because they're now fraudulent in your face.
Yeah.
The exchange for physical in London is in your face. The data is absolutely crazy, stupid, and it's bringing about a lot of questions. So for the Chinese to break the physical market and to break the price patterns so that we get maybe 5 different, okay, let's just say Singapore dollar. That's not a tiny market. Gold in the Singapore dollar is probably going to have a liftoff. We've already seen it with Japan. We're on the edge right now, the gold price in yuan Chinese terms. I haven't seen the Korean won, WON, and that gold price. But I think we're going to see it all across Asia. So we interrupt their supply chain. We do harm to their economy. But what we do is we lift the dollar to the point where it causes a problem. And we're going to have to deal with an ultra-high dollar, while at the same time we've caused a gold market rally all across Asia, where we boast of their damage to the supply chain, etc. Wow. So if you've got, say, some stock and you're Chinese, do you think you might move some of it out and buy a shitload of gold coins? You bet. Okay, so this is where the vengeance is going to come. It's stock market decline, property decline. Maybe just I'm unemployed, so I've got a bunch of savings, but I'm going to convert a good 3/8 of it to gold. Okay, the safe haven, and they're going to just ride it out because it's going to go up. We might, I just cannot put time frames on this, Chris, but we might see some pretty interesting, fun gold rallies this year.
Yeah.
I had one colleague, I don't want to name him because it hasn't turned out correct yet, but he said, we're going to see with this coronavirus, the stock market go no bid, in other words, fall, and the gold market go no offer, meaning rise. No one's going to sell gold and no one's going to buy stocks. Okay, we're getting there because the warnings have just started with Apple. Their supply chain is interrupted. What does that mean? How about lower sales? And does that not mean lower profits? I think so. Okay, this is not rocket science. And we've wounded the Chinese dragon. And the Chinese dragon is going to take the gold pill. That's what's coming. Going to come in a lot of forms. It's going to be exciting. But we have a challenge to survive. And for some, it's not going to be simple. My situation is not simple. I had a climax of events happen over Christmas. It turned my Christmas into a very depressing event with a near calamitous event that cost a bundle. So I'm asking people to go to the donate button, hit it on the Golden-Jackass site, and help me out. And if you do more than a small amount, contact me and I'll arrange for something. I've had some very generous aid in the last 6 months, Chris, and I want to express my gratitude for a lot of what's going on with the aid that I've received. I've gotten a couple people say, I don't want you to mention my name or even describe where I come from or what I've done. I'll just say there are a couple people who helped me a lot, and I'll never forget them. What I've got now is a different component. I don't want to be long on this, but my losses have come from 3 things. And some people have given me some rather harsh insults, like, well, you got a PhD in statistics, but you couldn't avoid fraud from a bunch of illiterate Costa Ricans. It's really a lot more complicated than that. It's that they control the system and can falsify paperwork, and it's very difficult to detect and avoid. I know a very smart man who has avoided the fraud, but he didn't avoid the legal costs, because they just they stick their hooks in you, and you got to defend yourself not to be wounded badly, but you're going to get wounded. It's like a grappling hook. Is it going to rip a hole right through your lungs, or is it going to just damage your leg? Okay, here it could be both. It could be either one. But I've got 3 areas where I've had loss, and it's not fun. It's been brutal. But the first has been basic fraud, contractor fraud, criminal activity, falsified insurance with trucking parts business. The contractor fraud in 2 different examples. Title fraud had to be cleaned up, hidden debts. That's one. The second area has been car crashes. I've had some fatalities that have cost money. And these are not just typical little fatalities. Wow, how did that happen? Okay, it's not simple to describe, but one involved a rather substantial loss. I mean, a very substantial loss. Okay, so car crashes. A third is, there are actually 4 areas. A third is bad construction. A really flimsy roof, and the whole thing fell down during heavy rain and wind. Flimsy roof. And you could do your inspection and the guy will say, it's in pretty good shape. But if you do a North American type inspection, you'd say, but that's only like 1x4, 1x3 studs. That won't hold up. Yeah, but we don't get hurricanes here. But you do get windstorms and rain, and I've had 3 or 4 examples where the faulty construction just cost a bundle to fix. And the 4th area is something more recent. This is hard to describe. It cuts across all. I've come to learn that there was a satanic young witch who directly targeted me and my lady and a friend. And the 2 women had a combined 30 breast operations for reconstruction after massive infections from Staphylococcus, costing a bundle. And after that came the car crashes, a tree falling on a property, various other losses, shorting electrical box and a fire through the roof, a different shorting electrical box. These are very costly repairs. But the biggest one is the crime scene with falsified insurance claims, and very, very costly. Oh, $100,000 fine to close that out. They called it second-degree fraud. We weren't involved. We were like 6% partners. Anyway, so we got the faulty construction, the car crashes, the demonic influence, and the basic fraud. This has been a really tough 3 years. I can honestly say that I broke down a few times during Christmas, and I really didn't want to visit friends much. I was kind of living from bowl game to bowl game and having a good time without betting, and making some good meals and going for some good exercise and getting some good sun. This has been tough. This has been very, very tough. I'm very grateful to the people who've helped me, especially the 8 or 9 who've been very significant aid helpers to me, contributors to me. And I might appeal to them again very soon, the next several days, because there was a death right before Christmas, cost me a bundle, and there was a court order. It was called a wrongful death. It was from something that happened with a property, and a neighbor died from the spread of the problem. And took me totally by surprise because I thought everything was fixed. But there were some health problems, and the lady, I think she wasn't very young and she wasn't very strong, but we accepted responsibility. The medical report came out, the court came out, and it was a very, very difficult challenge to meet the court order, but it broke me. So I'm starting over again, Chris. This is just way too hard for any guy to manage, and I'm dealing with a lot. So those people who have no heart and say that I'm stupid, yeah, I've made some mistakes. It's pretty hard to avoid title fraud. I got to tell you, it's pretty hard. There's a joke going around that if you got an attorney who has a title and he hands it to you and says, this is legitimate, you better hire 2 other attorneys to check it, because one might be his friend. You got to hire somebody from across town. You got to bring in somebody from a different town. You got to do multiple lawyer checks on title fraud. And it gets even worse because they do not have a centralized title database here. They got one in every county of the country, and they're not coordinated. So you might have a title lien in a neighboring county where the electrician, for example, did some work, didn't get paid, had a $22,000 bill. The Costa Rican said, go to hell, and he filed his lien in another county, and it's not visible in your county because they don't have a coordinated database on liens. They call them gravamenes. The gravamene database is not coordinated. This is just third world shit. And I'm dealing with a lot. The newsletter is still hanging in there, and I'm very happy for that. I mean, 15 years, gee. But, you know, something happened. This really was a turn of events that evolved all through 2019. It was 15 different forecasts that hit. And they were basically the preliminary steps of the global financial reset, the gradual phase out of the petrodollar, the gradual phase in of the Belt and Road, and the general de-dollarization, all working together to create a whirlwind that resulted in 15 correct forecasts. So that's probably why I'm still hanging around, because I got a few competitors. They are long gone. And,
Well,
you know, they were friends. I met them at the Cambridge House Canadian conferences. They're gone. They're all gone. One of them is a very good buddy of mine in your area. And he had to close down his newsletter because it went from 7,000 to 200 in his client base. And I'm still going relatively strong. It's their losses. I mean, you can't have economic damage without lost clients. What I'm seeing is I'm getting more foreign clients, non-US, But what's coming next, I've gotten some advice. Why don't you hire someone to translate your newsletter into Mandarin and get a lot of Chinese and Hong Kong clients? Well, that's a good idea. It's not very easy to execute, and I'd have to I don't want to get into how to get it done. But I urge people to go to the Golden-Jackass website and sign up, look around at the free material, and make a donation. I've been really surprised, Chris. I got to tell you this. Since I put the button on last July, I've had about 20 different clients sign up for the newsletter and make a donation saying, I owe you for the past interviews that I followed often. I'm going to buy the new and I'm going to pay for the past. And I think, well, that's really nice. But I also had a couple people, this is recent, they signed up, several months ago, and they said, I don't want to renew. I really haven't read your newsletter. I did it to make kind of a donation, and I was curious what your newsletter was like. So instead of making a donation, I signed up for 6 months, but I've only read it a little bit. It looks very well done, and keep up the good work. I think it's very good work, but I'm not really sure. It's cute. It's just cute. I send them nice messages. I'm only nasty to, I don't know, 1 out of every 500 emails, I'm nasty. Oh, I'm nasty.
I wouldn't want to imagine being on the other side of one of those. Although I think what you're speaking to, people do appreciate what you do and what you share. And folks, if you'd like to get the newsletter or if you're able to make a donation, that is in the description down below. And I'm certainly grateful for what you do, Jim, and hopefully we'll have some good news there. Before we wrap up, I know you did say you had a comment on the bond market as well.
Infinite QE is blossoming. It's now being recognized as infinite QE. I'm hearing the word infinite in the same sentence as QE. Now, you don't have to call it infinite QE, but if you say QE has taken on incredible proportions where it looks like the supply could eventually become nearly infinite. Okay, you don't have to be too clever to read, but it's expanding. And here's some of the expansions lately. I heard, this is from, oh gosh, I can't remember his name, a silver guy, Dave Morgan. I heard in late October that the Fed was buying everything in sight. They didn't care who the owner was or whether there was doubt of who the owner was. And they didn't care whether it was impaired. They were going to buy it. Because, we're using an instrument with free value, free cost. If it doesn't cost anything, you can buy something impaired. You don't care what it's worth because you're not paying anything for it. You're just covering it, and you're floating in some funny money into the system to redeem that guy and save his hind end. Okay, so the Fed was buying impaired assets with unknown owners, and I think that's the overnight repo where they borrow your asset, Chris, and put it back before 6:30 in the morning, and they do leveraged junk off it, and they got burned. Okay, so the Fed's buying unknown, impaired value. That's one thing. The next thing is we heard that they were expanding repo to include not just banks but hedge funds. And, most hedge funds are operating under a Wall Street bank. That's not all, but it's the majority. Like if you take a look at any Wall Street bank, you'll probably find 30 hedge funds. And they got a VP who acts as a supervisor whose main role is to deny you knew anything going on when it went bad. That's a joke. His job is to supervise and make sure nothing criminal is done and that their rules and algorithms are prudent. But they overdo it, they over leverage, and they're doing the basis swap trade, which indirectly now, this is part of the infinite part, the hedge funds are indirectly funding the treasury bonds and financing the government debt with their swap trades in the tens, if not hundreds of billions. So if it's not the exchange stabilization fund, not ETF, the exchange stabilization fund of the Department of Treasury, creating phony demand for a treasury bond. In other words, a computer is buying it rather than, say, Korean surpluses.
Yep.
If it's not the ESF at the Department of Treasury, it's a hedge fund doing their swap trade, using borrowed money from the bank, the Wall Street Bank, which is funded by the Fed. So the Fed is indirectly complicit in hedge fund Wall Street purchasing and support of the treasury bond market. We've got almost no buyers of treasuries, yet we have a rally in treasuries. The yield is going down. Here's another trade that's quite interesting. It's that the the European yield is something like minus 0.5%, minus 0.3%, depending on the country. So if you borrow euros, I can't stop. If you borrow a short-term, say, German Bund, you borrow it, they pay you. If you short a negative yield bond and bill, they pay you. And with the money and other funds, you can go long the 10-year treasury and earn the VIG and be subsidized for some of your purchase by shorting the negative yield. What's the result? It pulls down the U.S. yield toward negative territory. Oh. Differentials don't last in Western financial markets. They get discovered, they get pounced upon, they endure leverage, and they are pulled together like a cable and a giant crowbar. So even though, this is where fireworks are going to come, even though the U.S. cannot get toward negative territory in the treasuries, we're going to be pulled there by the leveraged traders who have no bounds on their hedge fund activity from their non-supervising Wall Street VPs, who appear in court to deny knowing anything that went on. And when it gets close to negative, you're going to see a massive exodus out of treasury bonds in favor of gold. Because the last thing South Korea is going to want to do with their ample treasury bonds in their Forex is to pay the criminals in Washington and New York. You get negative and you pay. So they're going to be pulled down to zero. When it gets so small, they're going to say, we're not earning anything from this. Let's convert to gold because it's going to go up, 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 up. So we've got a device to pull down the yield, which will result in gold purchase, gold conversion and purchase. It's going to be exciting, and it is inevitable because arbitrage trade is all over the place, and it's one of the safest trades if you don't blow up on your leverage. In other words, if you do a Euro bond, Deutsche Bond, Bund, German Bund versus Treasury, and you keep it at 5 or 10 leverage, you're going to make out very well. If you get greedy and move it to 30 and 50 and 80 leverage with a go-ahead from your dumbass VP at the Wall Street Bank, you might blow up. So if you get greedy, they have a saying, pigs get rich, hogs get slaughtered. And it's going to work with this. And it is inevitable that we're going to see a rally in treasuries. Doesn't matter we got a lot of debt. We deserve a 15, 18% yield on the 10-year because we're broken, we're loaded with deficits, we're not fixing anything, we got missing money, we got fraud revealed constantly. That doesn't add up to a bond rally to me, does it to you? But we have it because the hedge funds are in control and so are the computers. Algorithm trades. Fun times. Just got to survive the mess.
I hear you, my friend. It certainly is wild out there, and I appreciate, again, all that you do in terms of digging through this stuff, writing your reports, and also joining me in the other shows that you go on, which I think people really enjoy. So I'll mention one more time, Golden-Jackass, which is in the description below, and that's where you can get the hat trick letter. That's also where you can make a donation to help Jim keep the report going. And Jim, just want to thank you again for joining me. It's always a pleasure catching up with you. And I have a feeling we'll have no shortage of things to talk about this year.
No, we have too many things to talk about. I remember an iced tea event with my father in the first year of the newsletter on his porch. He said, Jim, you think you're going to have trouble finding things to write about to fill a report? I said, Dad, if things continue in the way that I expect with more and more crises, like in the housing market, which has the bond market behind it, this was '05 we were talking, I don't think we're going to have any trouble at all in finding material. It might get difficult. I had to go to 2 reports in 2008. I went to the macroeconomic report and the gold and currency report. They were each, 30 pages. It was a lot of work.
Yeah.
But in January of last year, I stopped that because all the forecasts regarding the crisis came to pass. Then we had QE for a few years. So QE was a guarantee of systemic breakdown. How are the pension funds doing? Do you hear any having a shortfall? Like all?
Yeah.
You can't have low rates and continue with the economy. It kills savers, kills retirees, kills pension funds, kills insurance funds. Are you seeing a rise in insurance premiums? It's because they don't earn anything on their nut.
Yep.
Are you seeing reductions in pension payouts? Yeah, because they can't earn anything on their nut. Oh, wait till they buy into the Chinese toxic bonds and realize more losses. Okay, we're approaching very serious systemic breakdown with the full aid and support of Wall Street and the government. They're doing nothing to stop anything. Okay, thanks for having me on. I could talk another hour. You got to shut me off.
Well, we'll just have all the much more to look forward to next time. I thank you again, sir.
Okay.
Pleasure as always. And
I got hiccups. Sorry.
Well, the government will scare those out of you soon enough, one way or another.
Oh,
right?
I'm glad I've not had any knocks on the door.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.